Let's check in with Chris Conway from the Australian Stock Report, live out of our Melbourne studios. Chris, welcome to you. So, nice to snap a losing streak. Good to have you back on. The key question, as you say, really will come via which channel in terms of the sentiment running hot or cold? What's likely to swerve us off course?
Good afternoon, Carsten. Yeah, look, as you say, nice snapback, snapping a 5-session losing streak. The question is, can we sustain it into the close and then, more broadly as we move through what remains of confession season? Obviously, a couple of companies out today, QBE being one in particular, flagging, not so good things, and as we head into local reporting season. So, look, I view the recent pullback from 61.50 into 6,000 as, a healthy pullback, if you will. I know that's a bit of a throwaway term, but the market had run pretty hot. We got the January Santa Claus rally as we expected, and the market needed to take a breather. And yeah, in terms of sentiment, what will drive us through the next leg, either up or down, will be how we report during the upcoming reporting season. Yeah,
and you certainly have, that theme running hot in the US right now. Again, you get then that tailwind of the global growth upswing too, and this shutdown, which has been, no news really for quite a while. It continues to really be no news. I mean, we make a story out of it. They run and rally off it.
Yeah, we do. We always make a story out of it. It prints headlines, I guess. But if you look back over the history of US government shutdowns, the market really has smiled and kept on coming, hasn't paid it too much mind. I think that the stronger narrative stateside is, Trump's tax cuts. It has been the narrative since he was elected. So really for the last year. Throw into that, there's some early stage papers flying around about potential infrastructure spend, which might provide another leg up as well. But yeah, look, that's the narrative that's driving US markets higher. And I think, we need to remember there's the context with comparison to the Australian market. So it is sometimes frustrating. We wake up in the morning, we see the Dow or the S&P, more importantly, up whatever percent, and then we've just come off a 5-session losing streak, which hopefully will be snapped by close today. So again, we just don't have the narrative locally. That's not to say we won't get a really good reporting season though when we move in unison with what's happening in the US.
You've got to wonder, a stock like ResMed, with the analysts talking to the flexibility it gives them to shift cash around the regions which they'd been precluded from doing in the past, which does then ergo up the capital management and or M&A scenario, whether that therefore arrests to a degree the share buyback that they've been on a pretty steady build out on executing. What are your thoughts there?
Yeah, look, I listened to the CEO's comments obviously on the show earlier today with keen interest around that point. The question was put directly to him. Does the tax cuts in the US mean that you'll increase your capex? And he said, well, yes, certainly, because the Americas is their key growth area, as you mentioned, double digit now, 12% in the last quarter, that they can take that money that they previously maybe wouldn't have because it wasn't tax beneficial to do it, and pour it into R&D, develop further products, and of course increase their share in the US market. So,
or would they have done it anyway? I suppose that's the other question. Would they have done it anyway? Your point about it being the key market, they had no real option but to capex away regardless, surely.
Sure, but I think the quantum might be different. So again, Apple did it the other day, of course, saying that they would bring home some of their $250 billion and turn that into a $350 billion investment over the next 10 years in the US and create 20,000 jobs. I think Apple came out and said, if not for Trump's tax cuts, we wouldn't have made this level of investment. So again, it relates to the quantum. Yes, certainly they probably would have done it anyway. Totally cede your point, Carsten. It's a very good one. But I think they've taken the benefit of the tax cuts and said we'll up the ante a little bit.
The other interesting thing, you speak on the repatriation, the notion now that he rode into the White House via America First, and we sort of thought that was a nice, cute slogan, but actually it's now being expressed via tariffs. So China and South Korea curbing imports. We sort of hoped that we could wish the problem away and that a tit for tat wouldn't ensue, but it's going to be kicking in, like it or not. So on that basis, this could all backfire spectacularly, could it not?
Yeah, it certainly could. I mean, with any of these policies that Trump is implementing, some of it's good and some of it's bad. It's a bit of give and take. Trump rode to an election victory on the back of helping the average middle American, and then he goes and appoints nothing but billionaires to his cabinet who own more wealth than about 80% of America combined. So he says one thing, he does another. There'll be good and bad. So yeah, again, totally agree with your point.
Okay, meanwhile, let's just come back into play on themes that you're monitoring. The production news out of Oil Search, seeing its shares supported. They're up 0.5% today. Again, the guidance is clearly what matters, the next chapter. Do we sort of see, if anything, that thematic around the quarterly revenues picking up some steam? I mean, sales volumes haven't where they might have been, haven't been there.
No, they haven't, but what I'm glad the market seemingly has done so far today and hopefully into the future is they've looked past the quarter. So the production was slightly down in the last quarter as compared to prior, and the sales revenue was down on quarter as well. But yearly, it was a record production number and sales revenue was up 17%. So I like the fact that the market has looked past the short term to the longer term, and also the guidance as well, as you rightly mentioned. If they meet their upper end of production guidance, they'll be at or slightly past the record production that they saw this year. As well as that, we all know about the plans to expand the PNG LNG project, which, as you rightly stated in the lead up, is really the reason why they had some good numbers over the last 12 months. A plan will be in place by the end of this year with production or extension of that plan into 2019. So I think there's enough long-term positive things for the market to cling to ignore that sort of short-term production and sales revenue blip, and I'm glad the market has done that. But the overarching factor on top of all of that is going to be, of course, what oil prices do. So again, looking closely at the numbers, they said the realised price over the December quarter was $63 a barrel. We're about there now. So they've been realising really good prices. I bet you my bottom dollar, if oil prices come off 10 or 20%, Oil Search's share price will head pretty significantly lower. So all about the oil price.
Yeah, as Santos equally knows. Meanwhile, over at QBE, it's interesting that the selling from this morning has reversed gear, and wondering how much of this might be sort of the perception, at least, on some scale via offshore interests that could be amassing around a story like this, seeing the opportunity to sort of strike and put out the feelers and maybe even some M&A.
Yes, certainly. Continued share price weakness in what, although troubled, probably remains a quality business in QBE, means that, yeah, you would expect offshore interest. It wasn't so long ago that the Oracle took an interest in IAG, so wouldn't be surprised to see someone sort of sniffing around at QBE. Outside of that, though, that's sort of the white knight scenario. Outside of that, Pat Regan will be very happy to put 2017 in the rear view. Just about everything that could go wrong did go wrong. They are doing a strategic review. They're looking at their Latin America division with the potential of divesting that along with some of the assets that they previously divested. So this sort of feels a little bit like a Qantas before their turnaround story.
Well,
getting rid of all the old dead wood.
Have they gotten rid of all the old board dead wood, though? Pun intended. When it comes to the fact that, you talked about Pat's, his progress and his mission. But let's face it, there was a culpable board behind everything you just spelled out. And what kind of a cleansing has there been there to satisfy you that, changes really are running through the company?
No, probably not as much of a clean out as a long-suffering shareholder might like to see, but I would hazard a guess that if the downgrades continue, it will come thick and fast.
Right, so it's all dependent on the analysts, basically. They hold the keys to board renewal.
No, not necessarily. I would say it's up to the company. If the company can turn the ship around, well, they probably all get to keep their hats. If they don't, well, they seal their own fate.
Right, well, watch the space. Which will come first? Generally, probably the news, and then the scathing rebukes, and then reprisals. Yeah, in that order, as we want to follow. Thank you so much. Talk to you soon.
Thanks, guys.
Right, Chris Conway, Australian Stock Report.